Hey fellow stock guardians, happy Friday, June 25th. I'm Hoda, a stock card CEO, reporting to you from a mixed stock market. Today, I looked at the impact of the consumer expenditure price index on the market indices movements, researched why Virgin Galactic and Nike's stocks jumped while SoFi Technologies ended in the red. The Nasdaq was the only index ending Friday in the red, while the other two indices wrapped the week in the green. One economic indicator that led to the market's mixed results is the Personal Consumption Expenditure Price Index. This is an indicator used by the Fed to track inflation. The latest report shows a 3.4% increase since May of last year. On the one hand, it confirms investors' concerns around inflation. On the other hand, it can be a confirmation that our economy is growing and on track. Before talking about today's winners and losers, let me give you a big shout out to all of you stock guardians. Thank you for watching, reading, and listening to the daily market recap reports every day. Our mission is to make investment research painless for you. If you haven't already subscribed, make sure to hit the like button and subscribe to the show or create a free account on stockcard.io to get the daily market recaps every day in your inbox. Today's winner section is a 2-for-1 special. We're looking at two stocks that were high up on both of StockCard's most viewed and winners list. One is space tourism company Virgin Galactic, ticker SPCE, and the other is athletic wear giant Nike, ticker NKE. With a new corporate space race unfolding in front of us, all eyes are on which company can get commercial space flights up and running first. Virgin Galactic crossed a major milestone today, announcing their FAA's approval for commercial passengers. This was great for the company, as regulatory measures are often large roadblocks for companies entering the space industry. The price of Virgin Galactic shares jumped 39% today before close. While an FAA approval doesn't guarantee success, it sure cleared up some uncertainty for investors. Now the company only needs to get its technology working, and it is officially in the space travel business. The 600 pre-ordered tickets for a $250,000 ride each is surely a sign of confidence in the company's success. I own a few shares after buying and selling a few times through my windmill portfolio, which is a more short-term portfolio with more short-term buys and sells. I plan to hold the rest of the shares I own as a bet on Virgin Galactic's success. Nike is the other headliner today, as it jumped 15% before the market closed. The price jump is due to the earnings report released yesterday, which blew previous estimates out of the water. Fourth quarter revenue was up 96% compared to the prior year. Despite China's heavy presence in their production and retail pandemic woes, the company has emerged as strong as ever. The CEO was confident that this growth is due to the continued evolution of the company's business model, which is now coming through Nike's direct and online sales. The closure of physical stores tested Nike's online systems, and the results were great. With this new business model transition, it is building an even more formidable company you may want to own in your portfolio, especially if you look for reliable stock picks that also pay a small dividend. 2 days ago, we discussed SoFi Technologies, ticker SOFI. Today, the stock price fell 11%, so I thought it's a good idea to see why. The company had a 424B3 filing to conclude its SPAC merger. For those of you unfamiliar with this, a 424B3 filing provides a regulatory notice of a change in merger terms. In this case, based on our team's research, it was related to the lockup period for about 5% of its shareholders and executives on June 28th. Somehow, this filing spooked investors who were already watching a downtrend and the negative momentum was only strengthened. If you have a better understanding of why the stock sold off, let me know in the comments. When we covered the stock on Wednesday, I was impressed by its low-cost customer acquisition business model. I'm sticking to my guns with this one. This SEC filing is unlikely to affect the company's success going forward, as long as this fintech company can handle managing all the financial products it's attempting to provide. It can be a major competitor to traditional banks. This is a dip that, if it continues, may make the stock worth a small spot in your portfolios as a bet on the future of banking. I'm watching this one. That's it for today. If you haven't already done so, please give a stock art a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Picks page on the Stock Art platform. Don't forget to sign up for a 14-day free trial with promo code ROLL all lowercase and in one word. And like, subscribe, and share these daily market recap reports with your friends and family. And come back next week for another market recap report. See you then.